So please remember the purpose of the financial reporting is what? Purpose of financial reporting is number one, to keep the stakeholders informed about the performance, position, and prospects of the company. And number two, internally for the company to make decisions. Now, if why do we have to show all these extraordinary item as separate line item and not as part of the sales? Let's understand this. Now, there is an extraordinary item. So first of all, let me also explain to you as to what is the meaning of extraordinary item. So what is an extraordinary item? And the definition, of course, is very simple. An item which is not an ordinary item is an extraordinary item. So if I am earning profit by sale of a land, please remember I am Maruti. Making profit by manufacturing cars and selling them is my business. My business is not to sell land. It is just that I had a piece of land lying somewhere and that I realized as Maruti I am not going to use for next 100 years, and therefore why to keep that land lying just like that? Let me sell it off and make some profit out of it. So that is an extraordinary item. Now if Maruti was to include this profit in the top line, what is going to happen? The readers of the P&L of Maruti will get a wrong impression about that year's performance, because they would think that the profit from the sale of the land is also coming from the profit from the operations of the company. So they will make a better impression about the company's operations, and that would be misleading, that will be misnomer. And that is why all the extraordinary items are shown separately after the finance cost is deducted, and that is why we call them as earning before tax and extraordinary items. So that is the reason as to why it is done. Number two, and you have very rightly gave the example of R&D. So please remember, it happens, all companies all over the globe would spend a lot of money on the research and development. And remember, it is not that every time you spend money on research and development, that research and development it becomes a reality and company is able to monetize that research and development expenditure. So many times it can happen, you spend crores of rupees on designing, let's say Tata Motors spend 20 crore rupees or 30 crore rupees or 50 crore rupees in designing a new model. But having spent 50 crore, they realize that this is not going to work. So they have to dispose that expenditure off. They got to discard that expenditure completely off. Now, where will Tata Motors show this expenditure on the failed research and development? It will not be part of the manufacturing expenses. It will not be part of the raw material cost. It will be part of your other no other extraordinary items, and let's say something like loss of sale, loss of asset due to fire. So this is again an extraordinary item. It does not happen in day-to-day basis. So therefore, it has to be separately deducted, and that is the whole idea and the purpose, so that the reader of the financial statement gets a real picture about the performance of the business and not a confused picture about the performance of the business. So let's say, for example, this company has earned a profit of 50 on account of sale of land, and at the same time, yes, Pinakinji, just give me a second, I'll come back to you. And this company has incurred a loss of 75 on account of the loss because of fire. So what is going to happen is minus 75, and so the 350 plus the profit from sale of land, plus loss from the sale of loss from the fire. So now this is your 325. Now this is your earning before tax, EBT. and I'm sure every one of you are very clear about it. So yes, Pinakin ji, please go ahead.